Hey traders, Jason here from Leavitt Brothers. So in this video, I'm going to talk about the details of some recent stock trades. Last week, I posted a video where I very quickly went through some daily charts, just saying, hey, this was a good short, this was a good short, this was a good short. A lot of stocks fell, posted big gains, but then the question becomes like, well, how do you play those? How do you trade those? Like, what's the setup? Like in hindsight, you could see that stock broke support and then fell 10, 15, 20%, and it was a good, was a good money maker. But how exactly do you trade that? So that's what I'm going to talk about here. Most of my trades involve just the simple price chart with the MACD and stochastic. Okay, in my masterclass, I talk in detail how I use the MACD, how I use the stochastic, how I use them together. So this is kind of a glimpse of that. So I'm going to go through a couple of the charts from last week. I'm going to show you the daily, and then I'm going to zoom in with an intraday chart of some sort, either the 1 hour chart, 2 hour chart, or 4 hour chart, just to give you an idea of exactly what I look for and how I go about taking these positions. All right, let's get to it. All right, so here is big commerce. Okay, weak stock in a downtrend, no question about that. Here's a bounce within a downtrend. Here's a bounce within a downtrend, and here's a bounce within a downtrend. So let's zoom in to right here and see how I trade such a situation. Okay, when you're going short, you can chase shorts down as they break support levels, or you can try and short bounces within downtrends. I like to short bounces within downtrends. This is how I do it. So here is the 2 hour chart of big commerce. This is what I saw unfolding. So you have the stock making a higher high here up to the red line, which is the 200 moving average on this time frame. You have a negative divergence because the MACD makes a lower high and the stochastic makes a lower high. Then you get a cross of the MACD while the stochastic continues down. Then over here, the stock moves sideways long enough where the MACD comes over and the stochastic cycles up, and then you get what I call a kiss over here and a cross over here, and then the trend continues down. Okay, so you get the negative divergence, and then you get the cross on the MACD. Then you tend to get either a bounce, that reverses the trend. Okay, and then you either get sideways movement or a bounce within that newly formed downtrend, or in this case, a resumption of the downtrend. And then you get a kiss from the MACD and a cross from the stochastic to help you time your entry for a continuation down. Next one, Oracle. So Oracle held up at first, but then it succumbed to selling pressure just like the rest of them. It looked like the stock was improving here. You can see a breakout to the upside. Stock was doing well, was above some key moving averages, but the entire market was not going to let the stock go. So let's zoom into this area here at the end of March, beginning of April, and see how I trade such a setup. Okay, this is a bounce within a downtrend. So first you got prices making higher highs here. This is the 240-minute chart, so it's the 4 hour chart. MACD histogram making lower lows, or lower highs, I should say. Okay, so there's your negative divergence. Then you get a cross here and a cross here. So both the MACD and the stochastic cross down. Stochastic also broke a support level there. Then you get one more bounce, as you can see here, but during that bounce, the MACD cannot cross back up. It merely comes up and kisses its signal line. At the same time, the stochastic comes up and then cycles back down. Okay, so you got if I were to delete this, so you get a first move down, causes the cross, then you get one more move up. It could be two, but during that move up, there's a lack of energy to the upside, so you get a kiss there and a cross there, and then a successful reversal of the mini uptrend, but it's actually just a continuation of the move down because the bigger picture trend was down. Let's look at another one. Shoals Technologies. This is a solar stock. It actually wasn't doing too bad, as you can see here. A little basing pattern breaks out. Volume here was looking pretty good. Okay, but it failed. It fell all the way back down to lows. Then it bounced. And so what we're going to do is we're going to zoom in on this area right here to see how we could have played that bounce within the downtrend. Okay, so here is the 60-minute chart. As you can see, this is the big bounce within the downtrend. The red line is the 200 moving average on this particular time frame. So what we have here is we have a negative divergence, MACD histogram, lower highs, stock, higher highs. So we got a negative divergence. Then we get a cross here for the MACD, a cross here from the stochastic. Then while the MACD is trending lower, the stochastic cycles up a little bit, and then it crosses back down, it breaks a support level, and then continues down. Okay, one of the things I use is, to me, the MACD is the trend, and the stochastic is a timing mechanism within the trend. So if you're wondering, like, should I short here, or should I short here, or should I short here, if you time your shorts for when the stochastic breaks down, that's a pretty good entry. Then you don't have to sit in a stock that's either moving sideways too long because there's opportunity cost, or that bounces much against you. If you wait till the stochastic crosses down, that's a good timing mechanism. So again, the MACD is the trend, and the stochastic is the timing mechanism within that trend. All right, let's look at another one. Shopify, this one goes back to the end of March. So obviously, great company a year ago, but falling on hard times now. Trending down, lower highs, lower lows. It pops up here. It looks like maybe it's setting up here. Maybe it could set up and then break out to the upside. But you got the 50-day moving average right above it. You got the 21 right below it. It could go either way. In my eyes, this has potential to move up, but it's still just a bounce within a downtrend. So let's zoom in on this area here at the end of March, beginning of April, and see what I saw. Whoops. So here is the 240-minute chart. So it's a 4-hour chart. So what we have here is we have a negative divergence as the price makes a higher high, MACD histogram makes a lower high. Then you get a cross down from the MACD and a cross down from the stochastic. Then while the MACD continues to trend lower, you get one more bounce, and during that bounce, the stochastic cycles up to the top and then rolls over. The MACD was not able to cross back up, so you get a kiss here with the MACD, you get a cross back down with the stochastic, and then the trend continues lower. Last example, GitLab, weak stock trending down. This is the bounce within a downtrend, bounce within a downtrend, bounce within a downtrend. Let's zoom in over here and see what I saw. So here is the 2-hour chart, okay? And this is what was going on here. So first you got a negative divergence as the price made higher high, the stochastic made the MACD histogram made a lower high. You got a cross down here. The stochastic here breaks a support level and goes down here. Then while the MACD remains trending lower, you get price moves sideways for long enough to allow the stochastic to cycle back up, and then you get a kiss here from the MACD, and you get a cross and a break of the trend line support from the stochastic, and then the trend continues down. Okay, looks like a reversal on this time frame, but if you back up and look and consider the daily chart, it's just a continuation of the move down. Okay, so that's how I dig in. Okay, I find stocks on the daily. I zoom in with the hourly, 2-hour, 4-hour. I use the MACD and the stochastic to help me with my entries. I talk about all this stuff in my masterclass. You ought to go check it out. It's available at the link below this video. Hope you got something out of this, and I'll see you next time.